Sterling Griffin, the one and only. Welcome to our show.
Thank you.
So, Sterling Griffin was actually referred by our guest, Chris Lee. And when he told us your story, we really wanted to bring you on the show. So I'm very glad you drove all the way to the far northern city called Fort Lauderdale. And no
Thank
one
God
goes
for
to
Uber.
visit.
Yeah, right.
Thank God for that. We don't have enough parking anyway. I have only 2 spots in my place.
It's not a lie.
Yeah, welcome to my home. And we have the equally amazing Scott DeClary with us. We were together at Inbound. We spoke at the show. Thanks to Scott. Nobody knows me over there, but they do know Scott. It's a big deal over there. It was a fun time.
It's the first speaking engagement post-COVID.
Yes.
So that was fun.
Yeah.
Wow.
Yeah, there was not in our crowd, I wish, but there was 45,000 people registered for the conference. So it was a big one. It was a lot of fun. Yeah, we just got back from Boston 2 days ago.
Yeah,
Why would anyone host a conference there? That's what I want to know.
In Boston?
Yeah,
Well, it's because that's where HubSpot, I think, was founded.
Oh, got it.
I think
it's HubSpot conference.
HubSpot, yeah. So I think chairman now, Brian Halligan, and original co-founder, I think he's from Boston.
Oh.
That's probably the only.
That's the only reason.
That's the only reason I
It's
can
not
think
a
of, because
destination.
It's not like
No.
it isn't a conference
No.
destination. I think that's why though. I think
I don't know if that's a real reason. I mean, sometimes budget maybe because no one else
I
wants
think
to
their
use their
headquarters-
location. Maybe that's also a good.
a budget.
Maybe.
Maybe I don't
Cheap.
know. I have no idea. Anyways,
Cheap arena.
forget about that for now.
Yeah. That's how we got here with you here.
Yeah, exactly. How do you know Chris?
So Chris actually mentors me. So he's
okay.
he's my life coach, one of my life coaches. It's funny, I have 2 life coaches that are in their 50s that are gay men named Chris.
Oh wow.
So I'm just collecting them. I'm just collecting gay middle-aged men to coach me
Is that
that are named Chris specifically.
Is that like a requirement for you?
That's
before you start. What's your name?
That's on my job
John.
description. Yeah.
Johnny, no.
Seeking
go.
life coach must be. Yeah.
Were you at the Summit of Greatness?
No, I wasn't. I was at it in previous years. I was in Lewis House Mastermind years ago. But I actually was in an event that Chris spoke at because he's a trainer. He's a transformational trainer in events all around the country. And I went to that back in 2016 and totally changed my life. Since that time, Chris and I hadn't stayed in touch, but I continued to build companies and grow and grow and grow. And eventually, about a year ago now, I reached back out and I said, hey, I'm at a point where I think working with you privately makes sense to go to the next level. And he agreed. So
yeah, I mean, for a while, I was actually very critical over life coaches. I mean, very sarcastic too and all that. And eventually you start seeing that there are results. You meet people out there that they had their life transformed because of someone's speech. And I guess when you don't have that transformation, you have different, you just don't believe it's real. And you say, you know what, it works. And when talking to Chris was when my opinion really, I got a little bit more open-minded for it. And then when I spoke to Chris the first time and then the second time, and then we brought him over, listen, it does something to you. Right, it does something. Some people they're wired different than others, and they have different energy and powers on other people, and they can really influence us to be better. Chris is one of them. I mean, this is definitely a person that I would say I want to talk to him more because I feel better after I speak to him. It's just some people would make you feel smarter, I guess, right? You can talk to some people intellectually, but some people somehow makes you feel better
about yourself.
Right.
They improve your self-esteem in their presence.
I think the reason why people hate on life coaches is because the bar to become, there's no accreditation.
Yes.
The bar is low. So when the bar is low for something, people are usually scammers or not qualified or
it's like
delivering
one to so many scammers except 1 or 2 that actually make people's life.
The thing about Chris is Chris was a coach before coaching was a thing. I mean, he's been doing it for over 30 years.
Yeah.
So if you think about in the early 90s, coaching was not an industry. I mean, there was Tony Robbins and there was a couple people like Chris. That's it, 0 others.
Yeah.
So when you have that much time in the trenches like he has, he's just way more trustworthy. I mean, his it's
the energy though.
Expertise is
but like when you speak to him, like there's an energy that you don't get with a lot of people.
Of course.
That's the first thing that I noticed. I actually didn't even know much about him before you introduced me to him. But there's like a certain energy that somebody like just brings into the room and it resonates. Like that's probably why you 2016 you connected with him and then you had period of life where you're figuring your shit out, and now you're making some money, and then you see value in it. So that's like not bad. 4, 5, 6 years later, you still want to invest in, and I know he's not cheap.
Yeah.
So there's something there.
Yeah.
Well, I think what I've noticed is that when people do it for a while, because you said, there's no accreditation for it, and there's no degree, but when you do it for so many years, you see so many people, and you can kind of like put them in buckets, and you know how to treat each person and how to approach a different person. Sure. And you find that when they talk about something and they tell you, oh, well, you're that type of person, it's like, wow, that's true. It's not some horoscope that, no, it's true. It's exactly who I am. And they can break it down, and they've seen a million views before. And they've seen million views transform before. And they can kind of like put you on the right path. No. Walk in that direction. That was when you can feel that this is true, this is real, that's when they get my attention.
So you brought yourself, and I want to clarify, you brought yourself out of homelessness, and I want to go into that story.
Yeah, and I was just about to connect that to our
because I also want to understand, like,
yeah.
When you bring yourself out of homelessness, and then you make some good money, and now you make millions of dollars doing what you do, and you are like a paper millionaire, multi-millionaire. What do you look to Chris to help you with? Because you've, in theory, figured out the most difficult thing that anybody could figure out, coming from nothing to something and then some. So what does Chris actually help you with?
I have it ingrained so deep in my consciousness at this point, for reasons that I'll explain here in just a second from my personal experience, that I always need coaches. I mean, just like athletes always need coaches. No matter what stage of career they're at, they crave coaching because they know without it, they can be good, but they can't be their best. And so 6.5 years ago, I was homeless. I had nothing. This was at the beginning of 2016, end of 2015. I was homeless for 5 months, living in my Honda Accord in LA. So I didn't sleep on the street. I slept in a car. So it was a step above other versions of homelessness.
And it was a Honda Accord. It's not a.
And it was a Honda Accord.
Yeah, Honda's a good car.
It's reliable. It's the first word out of people's mouth when they hear, it's reliable at least. And it was. And the reason why I became homeless, though, was a few months prior to that, I was actually a pastor. I was a Christian evangelical pastor for several years. But while I was in seminary school, which, do you know what seminary school is? Seminary is like graduate school, but for ministers. Okay. It's like you go to study the Bible in an academic setting.
You're talking to 2 Jews, that's why.
Okay, great.
Actually,
perfect. This one. So you learn something new here. Yes. So that's seminary. Yes. And while I was there, I realized I actually didn't believe anymore. I didn't believe in Christianity anymore. And it led to this terrible, I say terrible now because it turned out to be instructive and useful later, but this identity crisis. What is life about? What does life mean? What am I supposed to do with it? And so over a period of several months, little by little, I ran out of all my money. I couldn't keep a job. I was depressed. I was in a very strong depression. I was just laying on my mattress on the floor and feeling sorry for myself, watching Netflix for months at a time, to where in October 2015, I could no longer afford the $250 a month rent to be the 5th in a 2-bedroom apartment in Pasadena, California. So I got kicked out, and I went and slept in my car instead for a while. But the first thing that I did once I became homeless, because I knew that I needed to change my mindset. Something was off internally here in my mind, and if it was ever going to get better, I had to change that first. So instead of spending money on rent that month, I went to go see Tony Robbins. It was the only person I knew that I thought, this guy helps people, he can maybe help me. And so I go to Unleash the Power Within event. This is you ever been to one of these?
I heard.
You heard about it before?
I've never been. But
I've seen them. I've never been.
Okay, so it's like
this is our skepticism about coaches. Like,
I hate personal growth. So, well, anyway, it was useful for me. I'll share anecdotally. It's a 4-day workshop. You go, there's several thousand people that go on a given weekend. It's 50 hours, like 12 hours a day, 4 days. Very, very intense. Like a rock concert, but 12 hours and you're learning things. Yeah. And on the 3rd day, Tony says...
Is it the one that's 6,000 or something like that to go in?
Well, this one was like... Oh, no, that's like the really nice seats. Your friends go to the really nice seats. Yeah. I couldn't afford that at the time. Okay. Yeah, I was like at the cheap seats.
$250 a month. Right?
That's why it's hard. That's why it's hard to believe that it's true, because you feel like it's all about the money, and but it's not. Yeah, they're allowed to turn cash, and they're allowed to be.
Yeah, well, he can charge a lot because he provides the value for it.
Absolutely.
He wouldn't still have the brand if he didn't. But anyway, day 3, he says, these incredible words. He says, if you take nothing else for this entire 4-day weekend, but the phrase I'm about to tell you, and then you use it, you apply it to your life, you will more than get your money's worth from this weekend. And so, of course, I'm on the edge of my seat. I'm like, what is he going to say? He says, proximity is power, and who you surround yourself with is who you become. So take a look at the closest 5 people to you, and you will find out the reason for why you are where you are today. It was like a light bulb went off. I'm like, oh, the reason why I'm broke, I'm unhappy, I have no good friends, is because all my friends are, all the people that I do know that are closest to me, they're like that. They're unhappy, they're broke, they're stuck, they're going nowhere, they have no ambition. So no wonder I'm the one that's stuck too. So it went off in my brain that I became obsessed from that day on that I'm going to get around people that are doing well in life. I'm going to get around people that are happy, are fit, are fucking rich.
Yeah.
Because if I'm around them, they don't even need to particularly tell me what to do. I just know by being in their energy, it'll rub off on me. And so over the next couple months, I started making friends with people that were running information, personal development businesses, because really the only thing that I had going for me at that time is I was in good physical shape. I'd worked out for several years. I was fit. I'd made a body transformation. And so I was like, okay, I can train people. I can do online training. I can teach people how to get fit for a living. Because I'd met someone at that event who also did that for a living, and that was inspiring to me. And then one day, a couple months in, I'm at this party in the San Diego area. It's what's called the conscious community. I don't know if you've heard this term before. These are people that they're spiritual, they're into personal development, they're running kind of info product businesses.
Conscious.
They're very conscious. Okay. And they'll make sure that you know how conscious they are. Okay. And so anyway, it's like midnight at this party, and I'm telling this life coach. She was a very successful life coach, making, multiple 6 figures. It's good for that industry. And I was telling her my sob story, like, oh, it's so hard to get clients. I have no idea what I'm doing. And she's like, well, who's mentoring you? And I said, no one. I don't have enough money for a mentor. She said, that is the problem that would be solved if you got a mentor. And I realized that my problem was that I didn't have enough money. I said I didn't know how to make money when I needed it, when I wanted it. And so at that point, it was like, come hell or high water, I'm going to get somebody to teach me how to grow a business. And so I maxed out all my credit cards. I borrowed money from my dad, which I was super embarrassed to do, to cover the first $2,500 payment to hire a coaching business mentor. And that next month, I went from making roughly a little around $1,000 a month to $4,000 that first month with him. And I'll tell you one more piece of this story that's important to why I am the way I am about mentors today. At the end of that first month, I made enough money to pay rent, so I was staying somewhere. I paid off some pressing debt that I'd been missing payments on prior to that. But I didn't have enough money to make the second payment to the mentor. My dad was no longer willing to loan me any more money. And so I remember it was on a Thursday, and my coach had told me, he said, if you don't make that second payment by tomorrow, I'm going to take you out of the program, and you're going to have to do this on your own. And it hit me at that time that like, I can't just do this on my own again. That didn't get me anywhere good. I need to keep getting support. And so it was 2 p.m. By 4 p.m., I'd made an ad and posted it. By 9 p.m., someone handed me $4,000 cash and drove away with my Honda Accord. I'd sold my car to pay the second payment to this coach. The next day, I took that $4,000, put it in the bank, sent him his $2,500 so I keep working with him. And mind you, 3 weeks prior, or a month prior to this, I was living in that. That was my home.
Wow.
So this was my last ditch chance to make it work. Well, that next month I made $12,000
Oh, wow.
in my business because I was so maniacally obsessed with doing everything he said to do. I became his best student. So over the next 5 months, I made $100,000, and it completely changed my life. I mean, this is money from where I come from that no one had ever made before. Like this is crazy. And then once I went to a conference that Chris hosted, and I started learning about not just running a business all myself, but hiring a team and leading others, being emotionally in a better place, I started making $40,000 a month for the rest of that year. Wow. So my first year in business, I made $285,000. Then the next year, I continued hiring mentors. I transitioned about halfway through the year to being a business mentor for trainers because word had started to get out that I was a trainer that had gone from nothing to something quickly. And they're like, hey, the hell are you doing? Because trainers don't make a lot of money. I don't know if you know trainers or
I know,
many of them.
they don't make a lot of money.
They don't get into it for the money. They get into it.
They're not making over $200K.
No, they're making like $20K on average a year.
They're making nothing. Yeah,
nothing. And so they started asking me, and I continue running the fitness business.
This first business is you just training people.
That's right.
That's the business.
That's right. Gotcha. Yeah. And then I start adding business mentorship to it as well because I start having a passion for it. Someone that literally couldn't eat every day and had nowhere to sleep for the first part of my training business. I want to help other people get out of that struggle for themselves. So fast forward 2017, I continue hiring mentors. That year I made 1.68 million. So I'd gone literally in 18 months from being homeless to being a millionaire. But I'm telling you this, not just sharing the result, but the reason why that was possible is because I hired mentors. Is because people gave me a blueprint. They said, do this, do this, do this. And then all I had to do was the easier work of just following instructions. And that created the life that I love today. I'm a multi-millionaire. I'm very, very happy. I have amazing friendships. I'm in great shape. And I really do I'm not self-made. I'm made with the help of people.
When you look at success stories, I think that everyone has their kind of like catalyst that said, okay, this was my aha moment, right? And I think that was your aha moment. There was mentoring where you said, okay, I'm really good and kind of like doubling down on those ideas. And if it doesn't, I tweak it and we go back into the drawing board with the mentor and we continue. Everyone, I think, is different. I don't know if everyone's good, but I guess that in my case, when I found that something was working for me, I doubled down on that. I was just pulling everything I can until I knew that no longer now I have to find something else, and I would look with commonalities what else works. But that was your aha moment. That was okay. I found my idea, because I think at first you're looking for God, and then you said, okay, I will replace God with a mentor,
with leaders.
Yes, that's something you need. Someone to kind of like be above it, to go and tell you, this is your direction, and you need that kind of like direction, but you'll be perfectly fine taking it from there on with just very minimal directions going forward, right? Yeah, that's interesting.
Can I ask a question? When you first worked with that mentor, that was a very high risk activity because you didn't have a lot of money to play with. So I'm hoping that somebody who's listening to this is not in that position.
Correct,
and they do have a little bit of extra cash, but you took a super high risk with this particular person, and that person wasn't Chris. It was someone before.
No.
So how did you gauge that this person was going to be the good option, the best use of your last whatever $2,500? Because that could have gone two very different ways, right?
Well, quite frankly, it was that he had done it for other people. Like he'd helped
so it was
other
recommendations.
Trainers.
It was
correct. It was
that
referral.
lady that told you, oh, you need someone. She referred you probably.
Exactly.
To that.
She did directly to him. He said, "Oh, this guy works specifically with trainers to build."
So you
online
put yourself
businesses.
in the right environment.
Exactly.
With people that are searching for results. Right, they call themselves the aware people. They're in, I assume, some party with lots of flowers around them. Conscious people, right? The conscious people.
Yes.
And some say, I'm very, very aware and conscious of myself. Don't you have a mentor? Let me connect you. And you were comfortable. You're just, okay, you know what? I'll do it. I saw that Tony Robbins made an impact. You already open up for that idea, and then you moved it. I mean, look, when we're like as people, when we go and we look for answers, many times you want to make sure that the answer is going to come from someone that's going to tell us, so you don't have to find it yourself. Because it's very hard to think that I'm the only one that have to come up with everything. So it's so convenient when you say, you know what, there is a rabbi, I'll follow this rabbi, or a priest, or Tony Robbins, or something like this. And this is where a lot of people are challenging that concept because they're saying you idolize those people. But in reality, it works for some. I think it doesn't work for everybody, but it definitely works for some. And I mean, when you take something that they're saying something and actually pushing it into your subconscious, right? If you tell me right now where you said, look, your proximity is, how did you?
Proximity is power.
Proximity is power, right? You'll hear about this since you're a kid, right? Tell me who your friends and I'll tell you who you are. You hear it all the time. But why is it that when you go and you pay so much money?
Well, by the way, not everyone has those messages from when they're a kid. Maybe you were fortunate to get those messages, but most people don't have that message in their ears. I didn't. Most people's friends are just the people that are they're closest to them physically.
He's not wrong, because I know that quote, like, the 5 best friends, or, all these quotes about being around the right people. I only really started to see and hear these quotes when I was already becoming successful. And then I found myself consuming this content all the time. And this is what but I was very much self-taught. So I was the person who was seeking this out on my own. And then I would listen to a business mentor say, surround yourself with the best people. But it wasn't my parents. It wasn't my friends in high school and university that were saying, like, hey, Scott, go level yourself up.
So do you have children?
No kids.
No kids. Okay, so you guys don't have children. Imagine if you are the Tony Robbins for your children. Imagine when you grow your children and you tell them, look, you can make your life very easy if you're surrounding with the right people. They'll drive you into the right directions. Always go with people that do better than you, because that's how I grew up with, right? We were very poor. My mom and I were also, I mean, there was a point that we had no place to live. She was a living au pair. She had no place to live, so I had to find some church people to help me be around over here. And But it was stuck in my head for years, right? And you don't put all that attention into it, but you somehow gravitate towards it when you're young. So imagine if you take those knowledge and you say, okay, it is gonna work for me, but how great it is if I can pass it on.
Yes.
And they're gonna be kind of like, it's going to be part of their DNA, their instinctive part, where they're going to come in like animals and figuring out who are the right people to hang with. And it's just your life as a parent are going to be so much easier, right? When you grow, and it doesn't have to be the private versus public. It's really easy. All you have to do is, are they bookworms? Are they just, what are they do? How is their language? How do they speak? Let me hear their verbiage.
Yeah.
Right? And it's just for you guys, when you have this, it's all about, we were poor. My mom and I were growing poor in an area that was good, but some people would be very poor, some rich, but it doesn't really matter for her. She didn't care if you came from money or not. She wanted to hear how my friends speak. She wanted to hear their Hebrew. And she would say, okay, you should spend more time with this friend. I don't want you to play with that kid. Straight out.
Wow.
Just with her.
Wow.
Yes, that counts to
Very
everything.
wise.
Yes, yes.
Yeah, I mean, I had all the messages when I was younger around, you know, it's not my fault, it's somebody else's fault that my life is the way that it is, and just that victim mentality, which I think it was rural America. I grew up in a small town in Northwest Florida near Pensacola, and no one that I grew up around, no one now has money or is successful. Most of them still live in that same town. They're repeating the same patterns of their parents and that culture, that poor people subculture. And I'm not criticizing it. I'm just saying it produces a certain result. And I knew that I knew from when I was young, I didn't want that result. I didn't quite know how to get out of it till later.
Actually,
But
that's probably why you were depressed.
Yeah.
When you were trying to figure it out in LA.
Yeah.
How old were you when you ended up being homeless?
I was 24. I was almost 25. Yeah. when I
Did you
finally got out.
graduate from college?
Yeah, I'd already graduated college. Yeah.
Okay.
Yeah. College didn't do anything for me.
We did speak about this before.
Yeah, a little bit before the show. Yeah, college is.
And tell us, for our listeners, what did you study?
Marketing and economics.
Marketing
Yeah.
and economics, and you did not find this amazing job, $500,000 a year, right
No.
after college?
No, the
How
thing is,
come?
speaking of mentors or the lack thereof, I mean, if you go to college to learn business, think about who you're learning from. You're learning from people that are academics. These are bookworms. These are not practitioners. They're not people like the three of us that actually run successful businesses
Very
today.
few. I will say shout out to like Stanford and Harvard who actually do employ.
Yes.
They do have some actual business people there
Yes,
on
they
staff.
do, but
Good.
not very many business schools have them, especially
Right.
not at an undergrad level. Usually it's for like a postdoctorate or like a.
Like, he's
MBA.
being Canadian and nice right now.
No,
so he's
I mean
saying-
Stanford has like some.
No, they do. They
Great.
do,
So
they
for
do.
the Stanford people,
Yeah.
congratulations.
There's about
Yeah.
1,200 colleges in the United States.
Yeah.
Okay, so you're plucking those two right now that most
Yeah.
people can't go into unless there's
Yeah.
a crazy story behind them. But yeah.
Yes, you're right. Most don't have actual like operators from businesses, or they haven't operated in like a significant period of time. Mm-hmm. So that's what you're stuck with.
Yeah, and so you go to those classrooms, and sure, I can learn information, I can memorize information out of a book, but I'm not actually using it. So that's why it wasn't useful
And
to
it's
me.
probably outdated too.
I mean, I just love it because you go and you say, listen, I went to school, I spent years in school. I ended up being homeless after school, and I didn't even consider doing something around this. I didn't consider taking another course in college to help me get out of my situation. I just went and listened to Tony Robbins, and I got out of it. It's like with a big fuck you with two fingers, with both hands, to the educational system. So if you didn't understand that up until now, I mean, what else?
Okay, so where are you at now? So so you grew this coaching business to like 1 point something million.
Yeah, it was the second year. And then I grew it by, the next year was 2.2, the next year 2.6, and then 2020 was the last year that I ran it before I sold it, and it did $3 million in revenue that year. I sold it right at the end of the year. And the reason why I sold it is, frankly, I was bored. I was just, I felt like when you run an education business, you're teaching a particular topic, and after a while, you're teaching the same thing over and over and over and over and over. For a creative like me, it was boring. I needed to do something else. So I removed myself from the operations of it. I put leaders in it. I went from at the beginning of that year working 70 hours a week down to 5 hours a week. And the margins, ironically, went up when that happened because I got people better than me doing the different parts of the business. And then I sold it. And when that happened, I was like, okay, I really want to learn about, because the business was very stressful, I really want to learn about passive investing. I want to learn about how to grow my wealth without working that hard. Who wouldn't, right? But that was the big idea. And so I'd heard real estate was great for that. So I start going all in on learning in real estate. I'm listening to podcasts. I eventually joined a mastermind so I could learn from real practitioners in person, people that are doing this. And after looking at, because I've got this capital and I want to invest it to grow it, but I moved most of my funding from it to come in the beginning of 2021 as opposed to the end of 2020 because I knew that I was going to get hit with a big tax bill if I didn't. I mean, you've exited, you understand this problem that happens. So I was like, okay, how do I offset these taxes as much as possible, as realistic? And so in joining this real estate mastermind, they show me a way to do that. It's what's called accelerated depreciation. It's where you can buy a property and then in the first year of ownership, you can take all of the depreciation associated with that property and use it as an expense to wipe out your income, to wipe out your taxable income and therefore pay no taxes. So when I discovered this, I was like, oh, this is like magic. So I want to buy properties, but then I'm like, okay, what properties do I buy though? So I start looking at different structures. And if you've ever looked at real estate deals, there's many different kinds. You can do syndications. You can do single family homes where you're purchasing individual homes. You can buy short-term rentals. So you could buy a home to then rent out for vacation users. You could buy multifamily apartments. But then there's a section which fewer people invest in or understand as a percentage of the total real estate investor market, and that's in commercial deals that are non-multifamily. So I start realizing there's just like a few people that were doing that in this mastermind, hundreds of guys that are all doing real estate, just like literally 3 or 4 that were doing this type of investing. But as I look closer, I start looking at these deals, and I realize there's a specific type of lease structure in commercial, in non-multifamily commercial deals, where it is 100% passive. It's where the tenant, the person that is inside of your business property, they'll pay for your property taxes, they'll pay for all the maintenance, they'll pay for all the insurance, they'll pay for literally anything that goes wrong with the property. They handle it themselves. They pay for it out of their own pocket, and it's no stress to you. So as I start comparing this to all the other types of deals, I'm like, this seems like the least stressful.
Can I ask, and just to put a time frame on it, this is, as you're exiting your business 2020, you push the sale to 2021.
I push the funding, yes.
The funding, so you get a calendar year to figure out where
Correct.
to put your money so you don't get screwed on taxes.
Correct.
You figure out this commercial, non-multi-res real estate opportunity. And for this particular opportunity, why would they take care of all that shit? The tenants, excuse me?
Well,
they do it. There's
why is that?
Yeah.
I'm not real estate, so so teach me as to why somebody would do
a triple net when you buy a warehouse.
They'll do this as a percentage because it means that they can pay lower rent.
Okay.
So they'll take on more responsibility, both time, energy, and money for themselves to cover all these additional expenses out of their own pocket. So for an investor like me that wants to feel more passive in my experience, this is great. Now, there are some investors that are like, they don't mind. They'll take the stress. They're like, okay, sure, you can call me at 7 a.m. for a broken pipe.
But
like,
it's actually standard for commercial real estate.
In commercial real estate,
triple net is the standard.
Okay.
It's just what people do. Yeah. You go and you do the math. It's like, okay, if this is the rent, then the rent comes after they pay triple net, after they pay your taxes on the property and everything else. So that is your profit.
If you're buying larger multi-res, then you'd already have a management team in place that would be taking care of most of these things anyways.
But then you have to manage people, right?
You do have to manage people.
So it's still a headache, and then more gray hair, less.
And there's still decisions that get floated up to you. There always is. But in triple net, it's way easier, way less headache.
And why is this not a more popular version of real estate?
Well, there's several reasons. One of them is because in general, most people would prefer to do deals that are smaller in total price. And that's for a couple of reasons. First of all, it's less intimidating, just right off the bat. And second of all, because it requires larger amounts down to get into properties that are triple net. They tend to be bigger.
You don't finance it the same way. When you look at residential, you can get sometimes 5% down, sometimes nothing down, and you're good to go, right? But when it's commercial, usually the interest rate is higher. Mm-hmm. And you have to put a bigger percentage down.
Correct.
So the pool of people that can enter this, plus the size is bigger. So the pool of people that can enter this. However, once you go into it, if you think about a warehouse, it's 4 walls, right? You do nothing. You don't have to worry about it. Maybe the roof, but that's it, right? And then what happens is they go and they do long-term 5 years, right? 6 years, long-term leases. and versus a residential where people get it for
a year at a time.
a year at a time, every time, and then a million things can break. Water heater, now they're going to sue you because she was pregnant, and so on, and they actually broke the water heater, so they can sue you. It's just all those little issues.
You're looking into some of this stuff now. So one thing about Yosef is when he wants to figure something out, you can tell he's focused on learning about this thing because he'll learn every nuance about it.
Yes, of course.
And the reason why it's interesting is because he's actually looking at commercial property, I think, as we speak.
I'm looking at commercial and residential at once.
You guys
most investors, most business guys, if they've gone through an exit, I mean, they're going to put some of that capital in real estate.
Yeah,
it's
real
just
estate.
so
show me how many people lost their money starting a startup or business, and show me how many people lost their money in real estate. Except bubbles, it's very hard to find people that lost money in real estate. So real estate really it's not like there is no brain. There is brain into it, but it doesn't take to. It just takes a different type of person. And when you look at real estate, right now I'm learning, right? I'm an apprentice, right? I did not touch any investments of any kind. All those years, I had one thing in mind: selling those black boxes to make up plovers, and then let me worry about everything else once I'm done. Right?
I was the same way.
And it's right. You double down.
Same way. Yeah.
So now when I look at this, there are two parts where I look at something. Right. I was very inspired. Have you heard of Moshe Mana?
No.
Okay. Moshe Mana is a multi-billionaire, a real estate tycoon, where he actually built first. When you look at the meatpacking district in New York, it was literally a meatpacking district. So he started purchasing properties over there over time and just transformed the whole place once he bought the whole place down. And he didn't really care much about the rent. It was more of what do you call it? Where you kind of like a land banking, right? It was just putting 4%, but then eventually what he did, he made it that look and feel, made that be cool. And then eventually he took all that cash, he doubled down and he went to Wynwood when Wynwood was a place you don't want to drive there during the day. And he bought 16 square blocks.
Wow.
And he didn't change nothing, he didn't build nothing except one place with convention center over there, but he did build nothing. He paid painters to come and paint. And then he started going from all those commercial areas that were for warehouses. He had to rezone them to be restaurants. You have to
retail,
rezone, right?
yeah.
Different type of retail. And he made Wynwood suddenly safe. And I spoke to him and he said, one day I drove at night and no one wanted to go in with him. He drove at night and he saw two young ladies going with miniskirts at night. And he called his brother and said, we made it. Now it's safe. You're going to see. Now it's going to blow up. And today Wynwood is Wynwood. And he owns 16 square blocks. Still.
Wow.
Because in real estate, you don't sell, right? You refi.
You want to
so
hold.
you refi. And now he ended up buying. So he told me now what he's doing is he's buying downtown, but only on Flagler. Because Flagler is the first street in Miami that was incorporated in 1895. So he told me what I'm doing is I'm just buying everything all the way to the hood, whatever it is, I buy it all. And then I put one or two destination places into it. And then I start changing the tenants, making sure that they're better tenants, making the place look cool, fun, chic, not expensive. I don't like it expensive, but I had just like... So he started building everything. So the way I'm looking at this now, there's an area in Miami that's a block away from Wynwood. And my friends and I we're going to start buying now properties. And it's still cheap. It's still scary, it's still sketchy, but we're going to buy blocks. Once you own the whole block, it's a safe place. You own the whole block. So the idea is you buy place after place after place. And the good thing is once you start renting it right now, it's the best time because obviously interest rates are high, so the pool of buyers is lower. So you buy it in now in cash, you wait for the interest rate to go, then you refi later on. And with that money, you buy another property. So basically $1 turns into 20, you know the drill, but the idea is go to one area, buy the whole block. And make sure that your friend buy the blocks nearby. And you wait for the whole area to develop. You do it right next to a good developed area.
Yeah.
And then you wait for the whole... So it's land banking. You put the money in, the whole area appraise eventually. So you put it for $1, then it's $2, and then or $3, and then you can change more. You can charge more rent, but you never really sell it. You always keep it, and then you just refi your
principal out and then put it somewhere else. Yeah.
So
yeah.
I mean the warehouse.
Well, that's a big money play. So a lot of people, they don't have $100 million to play with to buy blocks.
You don't
need
that. You can get a block for 10, 15, 2, 3 blocks. And that's all it needs, because in the center of town, by downtown, there's no more expansion. No one does any more single homes.
Yeah.
They're only going to build more buildings.
Correct.
So
High
you're going to
rises.
be right there. You kind of like the last Mohican, the last Mohawk, right?
Mohican.
Yeah, Mohican. So it's like, just as you're buying them now in the cheapest area, because it's just a matter of time, give it 5 years,
5, 10,
it's going to be gold. Yes.
Yep.
And you don't need that much money. And people can come in. You can buy 2, 3 homes if I tell you where it is. And you can come in with $1 million or $2 million, and you're just good. You're just sitting on it. And we're all doing it collectively. And we're lifting the whole place. You don't have to go with 500 million like he did when he bought Wynwood at the time.
That's awesome, man. I love that play too. Yeah. I mean, for me, the initial pain I was trying to get out of with my investing was I want it to be passive. So I want my appreciation to happen whether or not I do anything, and I don't want any additional expenses. And then B, it was, how do I eliminate my taxes? How do I literally just, the outcome was this. Is it possible that I can use money that I'm already going to spend on my taxes and use just that portion of my exit to buy properties? And so I closed on my first property in my first commercial property in April 2021 to do this. This was a $3.7 million property. And I did it in such a way where, and this is a big part of my strategy now for what I do with investors, is I negotiated between, I got a loan on the property, and I also negotiated the seller of the property to carry a portion of the down payment for me so that I was able to get in for a very, very small percentage. I was able to get in for, I don't know, it was $414,000 on a $3.7 million deal, which is just over 10%. It's very low as a percentage compared to what you said. Most times in commercial, you're putting down 25, 30%. That's the typical. A lot of times, multifamily deals is 35%, so it'll be even higher LTV. So here I am getting in for about 12% on this deal. And it was like, in the process, putting down $400,000, I was able to offset exactly $400,000 from my tax bill, from my exit.
Amazing.
So all of a sudden, it clicked in my head. I'm like, what if I could do this for other people? What if I could take an investor that entrepreneurs, they make a high income, not even people that exit, but just people that make a high income and don't have offset for their taxes. They're going to, on $1 million of income, they're going to pay $300,000 in taxes. How can I make it so that I can get them into a secure deal like this? Leases not just 5 years in length, but 10 years, 15 years. My average is 20 years on deals that I buy for myself, 20-year leases. So someone buys a deal, they have guaranteed income for 2 decades. You talk about set it and forget it. All the expenses are covered, all the management's handled for 2 decades, guaranteed. And so I got 20 years, and call it a $4 million deal. I can get somebody in for $300,000, $250,000 sometimes. And at the same time, offset $400,000 in taxes on that same deal for them. So it's something that I realized, and I can share more on this, something that didn't exist really in the space. I mean, most times, if you look at deals, you understand.
It's a finished good that you're giving people that don't have to think too much.
Yes. Yeah. And I end up being the seller in this arrangement to them because I buy the property, I get it set up, and then I sell it off to them. And as a result, I can get them in, because I'm the seller, for less than they otherwise could do if they bought a property off of online exchange or something. Like you could get a deal theoretically like the ones that I give to investors, but you could never get into it for the amount of money that someone can get in with me. A $4 million deal, I mean, you're going to put $1 million into
So
it.
aren't you taking on more risk though that way?
I am, but that's why I make sure the leases that I structure with my tenants that are structured a very particular way. I'll give you an example. I have this fast food chain that I work with. I have several locations I'm selling this month for them. I'm buying a couple myself. I'm selling a couple to investors. And on these leases, not only are they triple net to where they cover everything, but they're also a step above, which is called absolute triple net, which means that literally anything that goes wrong with the structure, they take care
broke, everything.
AC, the roof needs replacing, the parking lot needs repaving, literally anything, they take care of it. But also there's layers of what's called guarantees on the lease. So when you have a corporate tenant, it's very normal for them to put what's called a corporate guarantee on it. So even if that individual location struggles for a period of time for whatever reason, then Mama Corporation will continue to pay your lease for you. So that's one layer of guarantee. Now, this particular chain is also held in a portfolio entity where there's several other brands that are held inside of it, which is also normal. Typically, you've got private equity or an ownership group, they want to own multiple brands. Well, that portfolio company has a guarantee on the lease as well.
Amazing.
So you've got the corporate guarantee, you've got the portfolio company, and then the majority owner of that portfolio company is super, super wealthy guy. He also agreed to put a personal guarantee.
Oh, wow.
So his own assets are on the line if something were to go wrong with the lease. And you have to understand, you've started looking at commercial leases, so you have context on this. That is extremely rare. That does not happen. Literally, the only way you can get leases like that are if you negotiate them off market, which is what I do. All my deals are off market. And so that's why I feel very comfortable both buying them myself. I'm like, I'm not going to lose money here.
So those deals are the ones where we spoke about this before. Say a chain is going to come buy the land for 500, build it for another 500. They're in for $1 million. They sell it to you for $2 million, but they guarantee you everything in. We're going to rent it for the next 20 years. So they made $500,000 off the bat before they even started. Then they got a franchisee to be forced to go and pay you everything, plus paying them commission.
They have their own guarantees that the
So,
franchisee
yes,
can't cover.
that's
Well,
the
in this case, it's not franchise managed, just corporate managed.
okay. It's a corporate manage. Okay.
Yeah,
I mean,
yeah.
I'm talking more McDonald's style because
Right,
that's
right, 'cause
exactly
it's-
what McDonald's does.
that's their model.
McDonald's model is. I have much more respect for McDonald's now than knowing how they operate in today's world, because what you saw with the founder was a little bit different with the movie. In today's structure is what I mentioned, where they buy the property, they build the property, they sell the property to someone else, and they guarantee to lease it for 20 years.
right.
But then they don't technically guarantee, they don't really lease it. That's a franchisee that has to pay the rent. And obviously, if that franchisee is no good, then they said, okay, then we're going to find you another franchisee, because that's not a problem for them. But they know that the franchisee is going to be in business. They know that everything is going to work, and then that's how they operate. So that's they make money from the franchisee. Plus, it's not even their thing. So they just make money before they even started. They bought something for $1, but it goes for $2.
So I guess the secret sauce really is finding some of these off-market deals too, because that's what
It's not just finding the deals. It's a good question that you're asking, but for me, everybody that's in real estate is looking for off-market deals. Okay, if you find a deal that's listed on an exchange online, you're only seeing that deal because it passed through 5 other investors' hands at a minimum, and they said no. So that's why it's listed on an exchange. All the best deals you'll never see online, and they're all passed under the table, so to speak, between guys that have connections. So I realized early on, if I was going to be new into this space, I wasn't going to get access to the best deals. I had to make them. I had to literally create them out of nothing. Ex nihilo is a old Greek term that I learned from Bible school. It means out of nothing.
Oh, it actually means that.
Yeah. Or no, that's Latin, ex nihilo. But
when you said you learned something from Bible school, do you feel like there's some things you learn from in a religious time of your life that apply for business?
Of course.
Right.
Everything that I've gone through has been instructive and useful to help me into the the man that I am today. Yeah, and I think you talked about this respect for authority. I definitely learned a level of coachability from being in religion, and that's maybe not something that most people would connect, but I learned an appreciation for, call it, following orders from people that I trust, and being coachable, being willing to implement, being somebody that's disciplined from that. Because prior to religion, I became a Christian when I was 16. I didn't have any of that. I was very lazy. I felt very disconnected, lost in the world, so to speak. And it provided a sense of structure that maybe the military provides that for other people in their life, or something else. But yeah, it was useful in that way.
And you're right. The military does. I'm ex-military, so it's definitely there's some. I mean, it depends how you take things in life, right? Things can go right above your head, and you wouldn't notice, and you wouldn't think about this. But when you're in a creative mode, when you're building a business, I think you're being forced to go back into your inner self, and everything you ever had in your life, you use it as a tool, and you say, I'm going to make something out of nothing, no matter what it is. And if it was Bible school, if it was minus business school, but everything else, you can go and bring it all in, and you can say that is more instrumental than you would think if you actually go and think about how to leverage that in your life. So I think when you go to, say, Bible studies, or if you go to military or something like that, you can absolutely use it for leadership. But when you go to Bible school, you hear the postures like, how can I be as charismatic as that person that speak on the stage?
Very much so.
Right? How can
Very
I get
much so.
people's emotions to come out, and because people would follow you because of their emotion, not because of their rationale. They will justify it with the rationale, but they'll do it because of their emotional side, right?
For emotional reasons.
So you just tap through, and by the way, when you tap into the people's emotion, it's not about he's intelligent anymore. You for good or bad, right? When you wanted to go and convince anyone, right? When the Nazis wanted to convince the Germans that it's time to go and be the superior race and kill Jews, the Germans didn't go into their rationale; they went to their emotional side, right? So it can go the other way around, right? So how can you go and influence people positively, right? You need to understand the difference between your rational and your emotional part.
Definitely.
Definitely. But go back to what you were saying though. To find these deals, you're not finding these deals. So it's hard to find these deals. So you're building them from the ground up. So
Exactly.
how do you build these deals?
Well, I build relationships with tenants that want to expand into new locations. They have many locations around the country, and they are in a position where they want to expand into new markets. Their core business model is very profitable, but they just don't want to allot the capital to buy the real estate. Or they don't have the team internally that can go and find the right real estate.
They want to keep the cash flow.
Yeah, they want to keep their cash. And so my model, what it allows them to do is have a new location, have the build out done, and have 18 months of operating capital, and for free. Like all they have to do is sign a 20-year guaranteed lease. It's a very strict lease.
It is.
It's very, very like hard line guarantees I negotiate and get. But at the end of the day, if they're confident in their business model, which they are, then they'll sign that lease because it enables them to grow their business very, very fast. I mean, this is not unusual within commercial tenants. I feel like it's useful for me to give an example. Like Amazon doesn't own a huge percentage of the buildings that they use. They just lease. And the reason why is because they don't want their capital tied up in a building when they know that same capital used in their core business model will yield them a much higher percentage. So many businesses are like this. They're like, hey, you go and make it ready to go where we can start making cash day one, which fast food restaurants, they're profitable day one. Like they're just like, they have a grand opening, a bunch of people come through, they make a bunch of money. So it's a good business model that has fast cash startup on it.
I was actually looking at a couple Amazon facilities that they wanted to open, and I think it's around $40 million when they wanted to open each one of them. And they're doing the same scheme like McDonald's.
Yep.
Buy the place, build
Sale
the place,
leaseback, yep.
and then and they're never going to get out. So it's a guarantee 4% cap rate plus and all that. And usually you'll find a lot of real estate investment trusts going through this, and you'll put their money with them, and then they'll go and they'll rent this. I mean, I think Harris is one a big real estate investment trust that has about $9 billion under management, and it's mostly Walmart and Amazon's locations, and it's something that's been going on through. I mean, it's going to be dying out for the little person eventually. It's going to go more into big money institution because it's already a business. So when you wanted to get a guarantee return, that's how you do it.
Yep.
Do you have to? So when you're buying these buildings, and is there like a chicken and egg scenario where you have to find the building and then you have to put it in front of the actual corporation to make sure they approve of the location, then you close on it? Is that?
Yeah,
there's a little bit of due diligence they
have
to
to
do
well,
to make sure that
basically I won't even start looking for the buildings until I have an agreement in place with the tenant. But then when I do and I understand their specifications, then I work with a site selector that goes and helps me find the individual locations.
Gotcha.
And of course they have to give the stamp of approval that they want to move into it.
No, of course. Okay.
Yeah.
So then you structured this building in an interesting way to sort of get yourself into the market a little bit quicker, right? Because you're coming from an exit. You don't have a huge real estate track record when you're first getting in.
Yeah.
So how do you make these? This was interesting because you're talking about even numbers before, like the percent interest and the fact that you can bring the actual down payment down from whatever 30+% to 10-ish, 6, 7. So how do you do these deals? How do you structure it so that your investors actually get these opportunities that normally they wouldn't have access to in terms of like the actual financing that you're putting forward?
Well, there's a couple things that make that possible. First of all, I work with local banks who give me very aggressive, very good lending terms that bigger banks that most novice investors would not have access to. Because I now have a track record on closing so many deals.
I got to ask, in today's world, what's your interest rate?
Well, it changes week to week. I mean, by the time this podcast comes out, it'll probably change again. So it's you know, it can't be nailed down right now. I think we're coming to the end of when it'll start like freezing for a little while towards the end of this year, 2022, when we're recording this. and then it'll kind of stay static for a couple of years. That's my guess before the Fed starts bringing it back down. We're going into a recession. I mean, there's going to be some pain that this economy feels. A lot fewer people are going to be spending money like they were these previous few years, and I think overall it's a good thing. You know, we kind of had the price, the values of things are a bit inflated from the last few years of having a 0% interest rate. So it's good. But I mean, right now, what I'm able to lock in for at least 5 years at a time is 5.75%. But again, by the time this comes out, it's not going to be that anymore.
Yeah.
It's going to go up again. It's just the nature of my industry right now. But yeah, there's ways that I flex on it. I get very high percentage loan to value is what it's called. Right now, I'm able to get 85% with a bank, local bank. Very, very unusual. But then also I float about half of it to an end investor. So I'm floating about 7.5% to them. So they can close on it for themselves, only putting 7% down. So you think about this. That same person, they go and buy that deal online, and it still won't have the same level of guarantees that my leases do, and it probably won't have as long of a lease as mine are. Maybe it's 10 years instead. That same deal, they're going to put 25% down on, because let's just say for simple numbers, it's a $5 million deal. Okay, they're going to put 25% down, and that's very good if they can get 25% for the normal investor. Most times they're putting 30, 35. Let's say it's 25%. That means they're going to put $1.25 million down to own that property. Whereas with me, a $5 million deal, they can get into it for about $400,000 or maybe $350,000. And yet, because they're 100% owner on that deal, they get all the benefit of all the appreciation that happens through time. So every single year in my leases, the rent goes up. It goes up 2% every year, like clockwork. And what that creates is, people in real estate understand this term. It's called forced appreciation. That means the property must appreciate because the income is going up. There are three things that affect the value of a property in commercial. This is just
buildings around and
well, three things that affect it. It's actually pretty simple. Number one is, how much income am I getting paid from the property? Number two, how long am I going to get paid that income for? So over what length of time is the lease? And number three is, how likely am I to get paid that amount? So how secure is it? Those three things. If you improve any one of those, then the value of your property goes up. So that's why when you increase the income on a property, and people in multifamily know this, you raise the rents.
That's why people give you tenant improvements. They say, I'll give you $40 a foot instead of $35, but I'll give you $100,000 to renovate whatever you want, because they want to make sure that they can do the refi and.
Exactly. So anyway, that same deal, they're going to get that 100% of the appreciation because they're 100% an owner. But now, instead of having to tie up $1.25 million, they can put $400,000 in, and then they have $800,000 left out. And by the way, they've wiped out $500,000 in taxes at least from just that. So they've now literally become cash flow positive just on the tax savings. And then they still have $800,000 left over. They can go and put into, call it another multifamily deal, or buy some houses with that, or buy a block next to Yusuf here. Well,
I'll tell you what, I can totally relate, because when you run a company, you're not trying to be in a real estate business. When you sell hamburgers or whatever, you're trying to just do your job and grow, and then because when you want to sell this business later on or go public or so on, they're not going to judge you on the appreciation of your properties that you accumulate, right? They're going to be judged based on the growth of the business and your EBITDA, and that's what it can come down to. So you want to make sure that you keep, and cash is king.
Yep.
Cash is king. Look, Apple had more cash than any nation globally, right? in reserves, but COVID happened. They went and they borrowed cash. They just wanted like oxygen. So that is a solution for a lot of companies, and that is a very unorthodox way to tackle a problem that most people don't think about.
Yeah.
So you went to a conference, basically. You heard about you went to a real estate conference.
Well, it's not quite that simple. I mean, I looked at so many different deal structures, and some of it was at conferences, some of it was just in Zoom meetings with people that I knew were experienced. And I basically synthesized a version of this from multiple different deal structures.
Interesting.
I didn't get this from any one person, and it didn't work like my previous business where somebody just handed me a blueprint, and I paid them for that, and then I executed on it. Like, I had to pull it together. And so at the same time, the value that I receive for myself as a business owner providing this to others is greater than the type of business that I had before. I mean, I've gotten significantly wealthier using this model because it is, by the numbers, much more value. that I'm providing to.
So
my investor.
I want to ask you. So since you're making millions, right? You're worth millions and in cash. So tell us about your lifestyle. I mean, we see a lot of people flexing a particular lifestyle once they start making some cash. And how is it for you? I mean, say cars and watches. And I mean, you look very simple. Kind of like reminds me of me.
Thank you.
Yeah. Not like Scott over here wearing a watch, trying to show off his Rolex over here.
You said we were going to wear blazers. I put on a blazer.
I was, yeah, I know. I said that. I changed my mind. So.
Well, this is a good. I appreciate this question. It's something that I actually think a lot about.
What are you wearing on your wrist?
These are just my intent bracelets. These are reminders. They're words about what I want to focus on. One says legacy, thinking about my life after I'm gone, and the other says grateful.
I love it.
So these are things that kind of ground me whenever I look at them. Yeah. Great company run by my friend Chris Pan. My intent.
I know Chris Pan.
You
I
know
had him
Chris?
on my show, yeah.
Oh, cool. I was
Yeah.
just with him at Burning Man.
Really?
Yeah. We're just hanging out.
He's very cool.
Oh,
Very,
he's
very cool.
amazing. He's amazing.
I was actually wondering because I interviewed him probably about a year ago, and I remember he was building out that company, and I wasn't sure if it was the same thing, but that's very funny.
It's Chris,
It's a very
man.
small world.
Yeah. Yeah. So the lifestyle question. I live a very simple life right now, and I'm thinking about elevating into that next level of stratosphere, like buying a big ranch property, making a compound, like building my own custom gym on the property. This would be in Texas, not here in Florida. So I'm thinking about those things. I'm not super attracted to buying expensive cars. For whatever reason, it's never quite landed with me as being important or even interesting. I do think about watches, buying nice watches, partly because they hold their value and pretty well. It's definitely better than cars, and also because they're just interesting to me.
What did you do when you sold?
I literally live the exact same lifestyle. Yeah, I am thinking about buying a plane sometime in the next couple months, a private plane, because I do see the usefulness of that, of being able to fly private. I'm getting tired of flying even first class commercial. It's like getting harder and harder to know when you're actually going to show up at the place, because flights get delayed or they get canceled. It's happening more and more and more.
How
just
often do you
unreliable.
fly? How often do you fly?
Every week.
Okay,
It
that's
would seem.
different,
Yeah, for one reason or another. So
Yeah.
whether I was just at Burning Man 2 weeks ago, I'm here for a week. I'm going back to Austin for an event. I'm going to Tulum next week. I'll be back here to film a bunch of content for my social the week after that. I mean, it's just a lot. I'm also a film actor, so I fly on to set to do movies for periods of time. That's been a dream of mine for a while.
What's a good cap rate, by the way, going back to real estate?
Yeah.
What's a good cap rate?
Fuck all the lifestyle shit.
Let me go and say, okay, so
He's
if,
like-
if
he doesn't
someone's
have
watching
a
this,
plane
if someone's
yet. He doesn't
watching
have a
this
car
now,
yet.
Yeah.
We'll talk
it's boring.
to it, yeah.
No,
It's
listen,
boring.
listen. I mean, so someone's watching it, everybody gets the cap rate. What's your return on investment every year from your real estate that you would say, this is the least I would consider if it was a regular list, not 20 years and all that?
Well, 20 years is something that is
Different.
I pretty much always do.
Yeah,
at
but-
this point. Occasionally I'll do 15 or 10.
Okay.
Because, and I'll tell you why that's important to me. I'll take a little bit lower cap rate to have more security on the length of the lease, because I never want to be caught in a position where I could lose a bunch of value with a lease ending.
Okay, so 10 years, what's the least cap rate you're going to consider?
The lowest that I'd consider would probably be a 5 or a 5 and a quarter. Yeah. But again, I'm always thinking, what is the return, with the percentage return that I can get on it, which is massively affected by how much money I'm putting down. So if I can put down 7%, the same deal that for somebody else might be an 8% return would be 24% return for me, because I'm getting in for a third what they're getting in. I have the same rent on the same deal. And yet it feels like 3 times the return, because it logically is. So that's the way I think about it. I'm looking always north of 20% annualized return on my real estate deals. And that is a function of getting in for less.
What's the deal that you're looking at now? That warehouse you were looking at?
No, the warehouse is one thing. The warehouse is something that I look. It doesn't matter at the warehouse. I'm actually I just put an offer on the person. It was actually a cheap one, but it was in an area that they bought out a bunch of homes in a bad place that turned into a really good place, and turning much more because they're putting right in front of me a couple high rises.
Oh, nice.
So there was a warehouse, and then there was a residential place. So the residential was actually a small compound, 14,000 square feet with 8 units in it. And the guy was trying to sell it for 1.9. We did the math that it's going to be 7% annualized return in the first year. And I said, I'll just offer him 1.5. See, they told me it's just way too low. No one's gonna. So I offered, and now he came back with 1.65. So
It's better.
Yeah. So I said, all right. I mean, that's cool. Let's offer him 1.55. Tell him final. See how it does. I honestly don't care. It's a small deal.
Right. That's
It's
so
a very
important.
small deal. It's
Yep.
just there. I'm not really developing the area like I told you I want to do in Miami, where you feel like we have developed that area when you're talking about legacy on your necklace, right? You said, well, that area was not the same, and you want to feel like you've done something. This area, someone already, they've been buying all those properties for 5 years already.
Yeah.
They're doing the same methodology
Yeah.
that I spoke to you about. So it's less exciting. But I can still throw some money into it because it will have the same effect. But there's not going to be the legacy behind this. I wasn't one of the original ones like Michael Mana Moshe Mana that built Wynwood, and today Wynwood is Wynwood, and it associates in those circles. Everybody knows it's him, right? So it creates legacy. If you want to create legacy in a real estate world, you want to go to a place in Miami, and that's where it's going to be, and it's going to be nice to know that you built this. But this is like an interesting deal, and I figure why not throw something just for cash, and my kids one day I'll tell them that's yours, nothing more.
That is a significant part of the value for legacy plays.
Absolutely.
Is being able to point and say that's us, that's our family,
Yes.
right there.
Yeah.
I have a question for you, and I'm trying to understand, and you probably have a strategy with where you want to build your business and your, I'm going to call it a fund, but it's not a fund, like a firm, whatever, company. When you're subsidizing, you're basically buying the properties and subsidizing the other investors heavily.
Yes.
Why aren't you just holding these properties yourself?
Well, it's because it's extra cash for me to sell it to other people. And plus, as an individual investor,
Not
there's
immediately though, still.
No, a lot of it comes later. Now, I do make some money up front just
Yeah.
because of the difference between the work, the property that I originally bought it for. I essentially add a significant amount of value to it by putting the tenant in, getting the construction
You're
done,
doing
all
all
of
the
that.
work.
Yeah, I'm doing all of that. And so I'm increasing the value significantly in a short period of time. So I make some money up front,
Yeah.
but yes, a big portion comes later. Ultimately, I buy properties every single month. So I do buy a lot.
Yeah.
I buy, I don't know. I bought a $12 million property. When was that? July? I bought it in July. And I buy between 7 and 10 million a month for
So
myself.
what I'm trying to get to,
is why don't I buy everything myself?
Why don't you buy everything yourself? And
'Cause I
then
can't
also in your head, how do you choose which ones that you want to flip? Like what's the metric you look for, or the category of property that you look for versus what you keep?
Well, this is a good question. I literally don't sell a single thing to investors that I wouldn't happily buy myself.
That's
But-
right. Yeah, I
So
get that.
so
So
every
if anything, you can fall down on it, and it's yours. And
yes. Absolutely.
Yes.
Absolutely. I would never, just for integrity reasons, I just wouldn't anyway.
Of course, yeah.
But the reason why I don't buy everything myself is because I get more capital if other people put money down.
Yeah.
Okay. So I'm just making,
You
that's
can buy it
essentially my
all.
active
You can
income
use all
that I
your
then
money.
put into
Yeah.
Yes.
to buying my own deals.
Yeah, it's like a
So-
little flywheel going.
exactly.
Okay.
So I take the money that I earn from investors, from buying them a building, and then I buy more buildings with it. So,
But
that is
isn't
my
that, I mean, I guess I misunderstood. Isn't that actually taking away from your cash flow for 5 years? I mean, you put the money in and only
well,
after
because I get
5
some
years.
money up front, based on what they put down.
Oh,
So I get
You're
some money up
basically
front.
maximizing in all
And by the
in all
way,
aspects. of
and by
money.
the way, as time goes on,
yeah.
I will require investors to put more money down. I don't have to do it the way that I'm doing now. It's an extraordinary deal in the way that it is today. But someone like Grant Cardone would never do this because he doesn't have to. He has a big enough brand where he can get more money up front because people just know his name. And as my brand grows, I will do more of the same just because I just won't have to do anything else. So really, people that invest with me now are getting the best deal that they're ever going to get. And quite frankly, that they literally could not get
Yeah.
from anyone else. Terms this good, they cannot, it doesn't exist. So, and I stand by that. Like anybody that
yeah,
wants to, show me a deal that looks as good as
Yeah.
mine. They don't.
So when you build out real estate firm, where do you take it? Do you start to raise funds and do larger investments? Is that
Yeah,
what
yeah.
would be
I'll
the
get into
next-
bigger and bigger deals for sure. I'll get into, $30 million. I mean, I'm looking at a $33 million deal with a partner right now. A big retail deal, big shopping center in Florida. And I'd love to do more like that. I'd love to do some $100 million deals in a year. That's probably the size deals I'll mostly be doing. So yeah.
Very good. Very good.
But yeah, this is all building for a big exit that I would do in 3 to 5 years from now, and at which time I'd either get into
wanna exit
private
still?
equity. Yeah, I'd either get into private equity or consumer product brands is something that is interesting to me. at that time, I'll also be a major film actor. That's my long-term play
Yeah.
is to be an A-list
Listen, one day-
film
one-
actor.
You
played in
It's
movies?
inevitability, yes.
You've done comedy too.
I've done comedy,
Yeah,
yeah.
Wait. So let's go back to that. So you're an actor. Mm-hmm. Still acting.
Yeah, I did. I've done 2 movies this year so far. One in
Okay.
Rome, one in Texas.
Okay. And what was the name? What were the names?
The movie in Rome was called Deep Six. It's an action movie. I played a character named. It's a movie about the breakup of an American drug cartel located in Italy, and I played one of the villain characters, the lead villain characters, named Jack. I was a manic psychopath character, which is so much fun to play as an actor.
Being a past.
To that, I've come a long way.
Yeah.
Yeah. So it was super fun getting to play that, playing alongside some stars, and then I played much smaller film, actually a Christian film I did in Texas, middle of this year.
Do you find keeping that creative outlet open helps you in business?
It just makes me happier. So yes,
Yeah.
I'd say for that reason it does.
Is it more like leisure then? It's not necessarily.
No,
it's more like-
It's something I take seriously and I work very hard at too. Yeah, I do. I love the craft of acting. I love the ability to creatively live somebody else's life.
It's also
for a few
helping the
moments.
legacy, right? It's part of the legacy.
Yeah, yeah, and
You
over
build
time,
an-
I will produce my own films because I want to create more positive messages in entertainment.
Yeah.
that are because that's how the masses get influenced is by entertainment actually. So like film,
sense.
TV, that's what teaches people how to think. So I want to make content over time that raises people's consciousness, that helps them think differently.
It's pretty strategic. You can always go and say, buy my properties when you put in
I mean, that's the
subliminal
Grant
messages.
Cardone. Well, it's not even subliminal. That's the Grant Cardone playbook. I mean, that's how he raises money for his properties. He has the whatever millions of people that follow him all over social, and that's how he crowdfunds for
Yeah.
real estate.
Yeah, it's a very different way than the original one, which was a boring business.
Yeah.
Suits behind desks, just small amount of people. Now it's kind of like open up to the masses, and everyone can come and invest. Throw $1,000 in my fund, throw $500,000 in my fund. Doesn't matter. It's for everybody. So you go retail basically. You don't go wholesale.
Right.
No, but what I appreciate with how you've sort of structured your life and how you're still pursuing your passions is a lot of people that get into building something. You were the same way when you were building BoxyCharm. You're so laser focused that you do nothing else. And I think that sometimes there's benefits to that, but I think that for some people that could be very toxic in building their life that way. Like it's not easy for a lot of people to just do one thing for 15
Stressful.
years.
No, of course not.
But you're not doing that. That's the thing.
No,
Like,
no,
you're-
no.
Yeah. You're,
No, I'm multi-passionate. I think a lot of entrepreneur-ish people are
Yeah.
like this. They want to do lots of different things. It's just interesting for them. I'm a creative, and so that's what keeps me happy. That keeps me engaged. Otherwise, I get very bored. So I love business and I love creative pursuits. So I'll always have both. I used to think that I would just be an actor, or for a period of time, I thought I would just be a businessman. But neither of them, in and of themselves, are enough to keep me fully engaged. I'll always need to have both.
I love that. Nice. Okay. So that's good for, I think we covered everything. We really did a good job on that one. So where can people find you? Socials, website, all that.
Yeah, I would say for people that are investors or looking to invest, they're entrepreneurs, or looking to save on taxes or things
What
like
about
that. Just
hot
want to look at
chicks?
properties.
Hot chicks that just want to
Or
catch
hot
up with you.
chicks.
Just, yeah.
Well, let's stay with the investors first. Hey, hot chicks that are investors is even best. That's the best of everything. They can just go to my website, sterlingcapital.cc. They go there and you can get access to my deal flow list. Just let me know a little bit of
What about
criteria
what's
about
your
you.
social media network?
We're going to that next. So sterlingcapital.cc, and then social media at Sterling on Instagram is the best way. So just my first name.
Awesome.
STERLNG.
Okay. Perfect.
Amazing. We did amazing.
Yeah.
Yeah.
You're
I agree. I did
amazing.
do amazing.
You're going to hash
Yeah,
out a
that
real
was
estate
really
deal
good.
after this?
Now, listen, this is really impressive. Very, very impressive.
Thank you.
Thank you so much for coming over. And we're going to sit down and keep talking. I definitely have some questions that I didn't want to put it on air for you.
Okay. Sounds good.
So,
Sounds good.
That was amazing.
Awesome, man. I appreciate you coming.
Thank you so much.
Thank you.
Yeah,
Very
you're
good.
welcome.